is at 3dayblinds.com.
In Los Angeles, I'm Con Rizdal. It is Thursday today. This is the 21st of May. Good as always to have you along, everybody. I am just going to read from the SpaceX S1 that came out last night. That's the first form that companies have to file with the Securities and Exchange Commission to start the process of going public. Our mission, it says, is to build the systems and technologies necessary to make life multiplanetary, to understand the true nature of the universe, and to extend the light of consciousness to the stars. So Elon Musk and the gang are taking a big swing indeed. This is the first look under the financial hood of the rocket company, which also owns the social media platform X, as well as XAI. It's coming before its expected IPO next month, which could wind up with a $1.75 trillion with a T dollar valuation. This is the first in a string of mega IPOs that are lined up. OpenAI as soon as this fall, perhaps Anthropic after that. Point is, this hasn't happened before. Companies hitting the public markets for the first time with such enormous valuations. This is Megan McCarty-Carino starts us off.
When the web browser Netscape went public in 1995, it was barely a year old.
At 11 a.m. this morning, the company's stock went public and Wall Street went bonkers.
That kicked off the dot-com boom, says Jay Ritter, an economist at the University of Florida.
There were lots of startups that went public at a very early stage where it wasn't at all clear who the survivors were going to be.
That created a risk for retail investors, but also opportunity to get in on the ground floor of tech companies that would build unimaginable fortunes, like Google and Amazon.
In the last few decades, they've been delaying going public.
SpaceX is 24 years old. OpenAI is 10. Anthropic is only 5, but all have mature businesses generating billions in revenue. It means gains have accrued to a smaller group of private investors and venture capital firms, and that important details about these companies' business models have been less transparent, says Minmo Gang, a professor of finance at Cornell.
Once you go public, companies can no longer cherry pick what pieces of information they want to disclose.
While these companies have booming revenue, Gang says they're not likely to be profitable in the near future because they're spending so much on hardware. But there's a lot of pent-up demand to invest in the technology people are increasingly using every day, says analyst Daniel Newman at Futurum Group.
These are companies that can legitimately take almost all of the market's liquidity for a short period of time, because there's going to be so many funds, institutions, and retail investors that are all going to want to participate and all be part of this.
A lot of individual investors have already been trying to scoop up shares ahead of the IPO on the secondary market, not always through official means. One investment banker offered his Bay Area home for sale in exchange for Anthropic shares. I'm Megan McCarty-Carino for Marketplace.
Wow, that is a big swing indeed. Wall Street today, stocks up, oil down. Stop me if you've heard that one before. We will have the details when we do the numbers. The average price of a new car in this economy at the moment sits right around $50,000. So